What is going on, everybody? Hope everyone is having a wonderful week. Just want to play this recording here for you. It was my execution that was done today. We can see real obvious. I've marked a fair value gap there, which I've entered off for a sell. We can see buy side liquidity, which is a previous high or any high. We consider that as buy side liquidity, so that was purged. Now when we had that buy side liquidity purged, I was waiting for some sort of displacement to the downside, which we got very clearly. As we can see, price did show a willingness to go down aggressively. We can see also that shift in market structure. So what I'm doing here, I was just tuggling through the other future pairs as I would like to see them in synced. We can see that they were also moving in alignment with the Nasdaq. Now I've just written down the focus is down here, so we can see those equal lows on the left hand side. I've got sell side liquidity marked. Also the objective, that's real obvious to me. So there's real orders sitting below that low. So once we had that market structure shift leading up to high impact news later in the New York, the analysis was pretty it was highly probable, which is what made it profitable. So that's what this works off, probabilities. Is it highly probable to go up or down? The probabilities of this running down was high because we did take out the buy side, so anytime it runs above an old high, is significant liquidity being taken out. Now the focus is still on that sell side liquidity, as in my mind I'm seeing already down candles penetrating to it and through it. And that buy limit is where I'll be getting out. This is really not too much, not too little. This is just perfect. This is ideally what I would call a low-hanging fruit objective. So we can see there I've just marked a new day opening gap, which I'm going to use once price gets to it. I'm looking to see that pink area. Once it gets to it, I want to see it act as resistance in a form of, it'll come down to that pink shaded area and then sort of back up to retrace and then continue the down run towards that sell side liquidity / objective. Now that little blue line that I've just marked is a small fair value gap. Now we didn't respect it the first time, but the bodies right there closed. I really like the way they closed, and just above that we had these wicks that were fairly clean, so that just got cleaned up. I believe so, that was the one that cleaned that up, or might make another run higher. But either way, the analysis we will see as we're playing price. So this market is, or this trade is sped up. This trade was approximately, I'd say 30 to 40 minutes, but I've sped it up to 3x, so it's sort of cut it down to about 10 minutes. I was in this trade much longer than this recording, just because I don't think many of you would be sitting on for 30 minutes listening to me talk. Eventually, maybe once you see that you get enough value, you might stick around for a bit longer than that. But we can see just now that those wicks, I just tug with my mouse on that as well, we did clean those up, which is exactly what I wanted to see. And this is where I would have liked to see a nice run towards that low that it's just made there. Now, reason why I'm trusting this pink area to, I want it to come to it, through it, you know, and show like a level of resistance, is because we can see already we bought from the low end of that new day opening gap, then we bought approximately from the midpoint, and this was the high end. So because this high end didn't really move up as quick as if it was probable, if it didn't have this much liquidity sitting below, I would have, you know, due to this circumstance, we can see that the low end was respected, the midpoint was respected, and now we're hovering back towards this shaded area again. So the probabilities of it now running through it was again highly probable. Now I'm just measuring from the swing high to the swing low that caused that displacement, and I've just moved my buy limit to the 0.5 standard deviation.
It's a lovely cool and it's a neat
because let me rectify that quickly. Audio, sound, play. So I haven't even, so you can tell I haven't edited anything, I've just sped it up. And then this is sort of when I begun my workout. We can see we've traded into that new day opening gap. Now we did hit midpoint, which once again, that low, this low over here and this low are fairly equal. So now I wanted to see, you know, this up close candle keep price down. Now some of you might be asking, well, if you knew it was going to go to it and through it, why didn't you just hold the trade and make more money? Well, as I also stated, there was high impact news in the New York, and I will be showing you what did occur after this trade as a little, you know, if you stuck around for this long. We do end up hitting that sell side, so I'll just skip through it. Play. We can see that we did wick there, and that was just thanks for watching. The video ended. So if I go to here, this is what happened. So this was the trade. Over here, we had that fair value gap. This is clean chart, no annotations. We had these lows over here. That's where I sort of got out. We can see we didn't move much more. That's okay. We did end up coming back, taking that old high, buy side liquidity, and then we had this massive bad boy. So yeah, thanks for watching. Hope you found this insightful.